Hello dear Forex traders, welcome to IFC Markets. You are watching weekly market overview. Last week, the US dollar remained under pressure against its major competitors, except the Australian dollar and the Canadian dollar, which lost 0.8% and 1.5% respectively. Among the growth leaders are European currencies. The Swiss franc rose by 1.1%, the euro gained 0.9%. The Japanese yen has shown modest growth, plus 0.6%. The British pound has remained unchanged, and the dollar index dropped by 0.6%. One of the most expected events of the previous week was the release of the September employment report in the US. The data did not meet market expectations, showing that the number of new jobs grew by only 148,000, while unemployment fell to 7.2%. However, still moderate growth of payrolls may finally start to draw back the terms of quantitative easing by the Federal Reserve. Now, markets expect that the regulator will resort to a reduction of support measures only at the end of the first quarter of next year. Under these circumstances, the US dollar remains under serious pressure. The currency index is now traded near the lows of 2013, around 79.00. The euro-dollar has managed to overcome the resistance at 2013 high at 1.3710 and is currently trading around 1.38. Some oscillators already look overbought, but do not yet give unambiguous sell signals, so we would not rule out attempts to test resistance at 1.3880. The pound dollar is not yet able to overcome the resistance of 1.6260, but did not fall below the current uptrend line. Technical indicators came out of the overbought zone, but there are signs of a bearish divergence, so further growth will depend on the ability to overcome the resistance of 1.6260. Otherwise, it may be a rollback to 1.59 to 1.16. The dollar-yen continues to receive support at the 200-day moving average and the rising trend line. It seems that the market is not ready for substantial strengthening of the Japanese yen. In the medium term, consolidation around the mark of 98 keeps on going. We would not expect a significant drop below 97.00, thus preferring long positions. Last week, the Australian dollar met resistance at 0.97, after which there was a correction to 0.96. Now the technical indicators, including MACD and RSI, provide sell signals. Taking into account that the strong support is around 0.9510, we can expect some continuation of the correction movement. This week, a saturated news flow is expected. On Tuesday, we are waiting for data on US retail sales for September. On Wednesday, the data on US inflation will be released, and in the evening, Fed meeting will come to an end. Perhaps from of the accompanying statement, it will be possible to assess the opinion of the Federal Open Market concerning fiscal policy and the future policy of the regulator. On Thursday, the rate decision will be announced by the Bank of Japan. Also, data on inflation in the Eurozone and the August GDP in Canada will be released. On Friday, we are waiting for China manufacturing PMI for October and ISM manufacturing index from the States. You are watching weekly market overview by IFC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.